CRA's 2025 Crackdown, the secret audit powers changing everything. Welcome back to Canada Chronicles. Today we're exposing one of the biggest changes unfolding inside Canada's tax system, a shift that could quietly impact millions of ordinary taxpayers. The Canada Revenue Agency isn't just reviewing returns anymore, it's transforming audits into full-scale investigations. If you think this only affects large corporations or high-income earners, think again. Everyday Canadians, retirees, contractors, and small business owners are already feeling the effects of the CRA's 2025 crackdown. From sworn statements to daily penalties, the rules are evolving faster than most people realize. Later in this video, we'll reveal something many Canadians have never heard of: the audit trigger you never saw coming. It's an ordinary financial decision that could unexpectedly place you under CRA scrutiny. So stay with us to uncover what's changing, why it matters, and how to protect your income before it's too late. Don't forget to subscribe to Canada Chronicles and turn on notifications so you never miss updates that could affect your finances and benefits. Let's get started. The hidden shift in tax enforcement. The Canada Revenue Agency is entering a new era of enforcement. What was once a cooperative, educational process has become increasingly adversarial. For decades, an audit was viewed as a chance to clarify, a request for receipts, a few explanations, and resolution. But under new legislation backed by the Department of Finance Canada, the CRA now wields sweeping powers to demand documents, extend reassessment periods, and impose penalties long before any wrongdoing is proven. This transformation means taxpayers no longer face audits only for major discrepancies. Now, the smallest error, delay, or missing detail can escalate into a prolonged investigation. Why this matters in 2025? This crackdown isn't random. It's driven by Ottawa's need to recover revenue and close the tax gap. With modern data analytics, artificial intelligence, and automated cross-checking, the CRA can flag irregular patterns within seconds. Following Budget 2024, the government introduced measures that let auditors act faster and with broader authority. In August 2025, the Department of Finance formalized these proposals into draft legislation. They are expected to become law as early as next year. In practical terms, a single overlooked income entry, property sale, or RRIF withdrawal could trigger an audit that feels more like a courtroom than a tax review. The CRA's expanding audit powers. The new framework gives CRA auditors unprecedented reach and enforcement strength. First, the agency can issue a notice of noncompliance when it believes a taxpayer has ignored an information request. If left unresolved, this triggers daily penalties, often $50 a day, up to $25,000 even before your taxes are reassessed. Second, if the CRA secures a compliance order from federal court and the taxpayer still resists, a penalty of up to 10% of the total tax payable can be applied. Third, the CRA can now demand sworn statements or interviews under oath. What used to be a simple call from an auditor can now resemble a legal deposition. Fourth, under new stop-the-clock rules, reassessment periods can remain open indefinitely when a dispute or compliance order exists. Finally, the CRA can compel disclosure of financial records outside Canada, including bank accounts, trusts, and corporate holdings, without reimbursing the taxpayer for compliance costs. These powers fundamentally change the balance between taxpayers and the agency. How this impacts ordinary Canadians. Many Canadians assume this crackdown targets only the wealthy. In reality, the CRA's automated systems now scan for inconsistencies across all income levels. A retiree selling a property, a contractor with fluctuating income, or a self-employed worker claiming expenses could all face scrutiny. Even when no wrongdoing exists, the process can be stressful and expensive, especially if lawyers or accountants become necessary. In industries like construction, agriculture, food processing, hospitality, and healthcare, where businesses employ both temporary foreign workers and permanent residents, payroll complexities and frequent transactions make audits even more likely. The CRA isn't always chasing fraud, it's chasing patterns. But those patterns often capture Canadians who simply made timing or reporting mistakes. How to recognize you're on the CRA's radar. The first warning sign is a formal letter requesting documents from specific tax years. The tone has shifted. No longer, please clarify, but you are required to provide. The second red flag is being asked to appear under oath or sign an affidavit. That means your case has moved into the compliance branch, which operates at a higher level of enforcement. The third is a notice of noncompliance. Ignoring it can quickly lead to daily penalties. And once a compliance order is filed, that tax year can remain open indefinitely for reassessment. Even if you've done everything right, the burden of proof now falls squarely on you. The hidden costs of the crackdown. The consequences go beyond money. For many Canadians, the emotional toll of dealing with federal investigators can be overwhelming. Even if no additional taxes are owed, defending yourself can take months or longer. Gathering years of receipts, responding to repeated requests, and paying professional fees can drain both finances and patience. The CRA's data-driven system has made audits more frequent and less predictable. What used to be random is now targeted, and that means the safety of being too small to notice no longer exists. Why few people know about this? Despite its reach, this issue has barely made headlines. Public consultations on the CRA's draft law closed in September 2025, but awareness remains low. That's partly because these rules haven't been fully enacted yet. They're expected to roll out with the 2026 federal budget, and partly because tax law rarely grabs attention unless it sparks controversy. But make no mistake, this is one of the most significant expansions of government oversight over personal and business finances in decades. How to protect yourself. The good news is, preparation can make all the difference. Step 1. Keep your financial records clean and accessible. Ensure every major transaction, from property sales to withdrawals, is properly documented. Step 2. Respond quickly to CRA correspondence. Under the new system, delays can cost you real money. Step 3. Know your rights. If a request involves private legal advice, confirm solicitor-client privilege before releasing anything. Step 4. If you own a business, appoint someone to manage CRA communication and verify every document before submission. Step 5. Avoid sudden, high-value transactions near the end of the tax year. These spikes are what the CRA's algorithms flag most often. And finally, stay updated. Once these powers become law, audits will increase in speed and scope. Thanks for staying with us this far. We appreciate your time and hope you're finding this information valuable. The audit trigger you never saw coming. Here's the one move that could unexpectedly land you in the CRA's audit system. And it's something many Canadians do without realizing it. The late year income spike. Picture this. You sell a property in November, take a large RRIF withdrawal in December, or cash out investments right before year end. In past years, that might have meant a higher tax bill, but nothing more. Under the CRA's 2025 system, that sudden jump in income can look suspicious. The algorithm sees a spike that doesn't match your usual pattern, flags it for review, and you soon receive a document request. If a compliance order follows, your tax year stays open indefinitely. Even completely legitimate moves, like selling a small rental home or shifting funds into a tax-free savings account, can trigger attention. It's not about guilt, it's about timing. When all your income hits late in the year, it compresses into one short reporting period, and the CRA's system interprets that as unusual. The solution is simple. Plan ahead, spread out big financial actions across 2 tax years, and document every step. In 2025, timing isn't just convenience, it's protection. What lies ahead? Once this legislation takes effect, expect more audits, faster investigations, and broader data sharing. The tone of compliance in Canada is shifting from cooperation to enforcement. Taxpayers need a new mindset. Not fear, but readiness. The era of wait and see is over. Now it's about staying informed, responding fast, and thinking strategically before every financial move. Preparation isn't paranoia. It's smart defense. The Canada Revenue Agency's 2025 crackdown isn't just a policy update. It's a transformation in how Canada enforces tax law. A simple oversight could now become an official investigation, but with knowledge and preparation, you can protect yourself from unnecessary risk. If this video helped you understand what's changing, make sure to like, share, and subscribe to Canada Chronicles for more true and timely insights into Canada's financial and policy updates. Turn on notifications so you never miss breaking developments that could affect your future. Thanks for watching, and as always, see you in the next video.